General Motors, and it has announced plans to close plants in Ohio, Michigan, and Maryland. It will lead to thousands of layoffs. President Trump spoke out about the news with some tough talk for GM CEO Mary Barra.
I was very tough. I spoke with her when I heard they were closing, and I said, you know, this country's done a lot for General Motors. You better get back in there soon. They say the Chevy Cruze is not selling well. I say, well, then get a car that is selling well and put it back in. So I think you're going to see something else happen there, but I'm not happy about it.
Joining us right now is Kelley Blue Book executive analyst Rebecca Lindland. Rebecca, thanks very much for weighing in here. Give us the impacts from your standpoint on these layoffs and plant closings at GM.
Well, thanks for having me on. You know, it's really unfortunate, and my heart goes out to those people that are losing their jobs and that are being laid off, especially, you know, at this difficult time. I think that it's important to remember, though, from an investment standpoint, that what General Motors is really doing is shifting expertise. They are moving people to plants that are producing very well-selling vehicles. You know, they have the new Chevy Blazer coming out that I'll be driving in a couple of weeks. They're really filling in their portfolio to reflect consumer demand. They're also hiring a lot of technology people. So it's people with different levels of expertise and different skill sets as Mary gets prepared to evolve this company. You know, she's been with GM for 30-something years, and she has been through the really bad times this company went through, and she's determined to not make mistakes from the past and to set the company up for success.
Rebecca, Lindsay Bell here. Talk about that transition you're seeing. You're seeing a lot of the automakers respond to competition from Google, Tesla, you know, Google's Waymo division about electric cars and self-driving cars. Talk about how that's evolving in the industry, how quickly it's moving, and if that is the right direction to go, because we were discussing earlier on the panel how electric cars really kind of fell flat earlier in the decade.
Yes, well, we've seen tremendous changes in electric vehicles, even from General Motors. I was disappointed the Volt was part of this cancellation because I do love that combination of engine plus battery. But the reality is that the new vehicles like the Chevy Bolt, that is a tremendous vehicle that has over 230 miles of range. So you don't really need the gas engine of the Volt. So I think that when we think about where battery technology is going, it makes sense that you don't need that hybridization. Now, in terms of autonomous or self-driving cars, I think we're a little bit ahead of the game in terms of demand, but that's only because we need 5 to 7 years to really bring out the technology that we need for true self-driving or level 5 vehicles that can just drive themselves, vehicles that Google is working on. So we will start to see increasing demand for electric vehicles, for electrified vehicles, ones that are very environmentally clean because of consumer demand. Those people that expect their vehicle to be environmentally friendly aren't really in the marketplace yet, but they will be very soon. And General Motors has to be prepared. So they've done things like spend $1 billion acquiring Cruise automation, and we've seen similar investments from companies like Ford Motor. So it's just an evolving mobility as a service. And that's what Mary's really trying to set the company up in order to lead in that space.
Rebecca, Dagan and Lindsay were talking earlier about interest-sensitive sectors. We've seen a slowdown in the housing sector. Autos are an interest-sensitive sector. How do you size up consumer demand for cars right now? Are rising interest rates having any impact on demand? And does that play any role in what you're seeing and what you saw GM do yesterday?
You know, John, I don't think that we're really seeing a pullback in consumer demand. The Cox Automotive forecast is for over 17 million units in 2018, which is really at the top range of what we had estimated. So we're still seeing consumer demand. What we're seeing is a lengthening of loan terms, which has me a little bit concerned as consumers move towards a 65, 72-month loan term. They're going to owe more on their vehicle than it's worth for a longer period of time. But what we're really seeing and what's really driving Mary's decisions about specific plants is that we are now at 70% car and truck split. So when we talk about trucks, we're talking about SUVs, crossovers, pickup trucks, minivans. All of that is 70% of the market, whereas just a few years ago in 2013, that was 50% of the market. So we're just seeing consumers saying, I want a utility vehicle. I want something that meets a variety of needs, and they're getting that in their SUVs and crossovers, and they're not finding that in cars.
Rebecca, it's Dagan McDowell. Some of the crossovers are like cars, quite frankly. I mean, they're smaller in size. They're smaller in size. That I think if there's a difference between an Impala and like a smaller SUV, then that's really not a big leap. But I want to ask you, do you think, did the tariffs on steel and aluminum play into this cost-cutting move by General Motors? Will we see similar cost-cutting moves from other automakers like Ford?
Yes, I do think, Dagan, I do think that the tariffs have played into this. You know, the automotive industry is not flexible. We don't have the ability to simply change plants or to move a plant. These are decisions that have been made years in advance, and billions of dollars have been invested. And it's just not that easy to say, oh, all right, we won't make this in Mexico anymore, or Canada, for that matter, or even Korea, where GM actually recently closed a plant. So these decisions, these suppliers have been made years ago, and to suddenly have significant tariffs on really does impact your balance sheet and impacts the profitability of these vehicles. And Mary's very sensitive to that. You know, she's very sensitive to whether these vehicles make a profit or not.
What's your take, Rebecca, on this Nissan Carlos Ghosn story? Now the CEO of Nissan is saying that the chairman, Carlos Ghosn, had too much power. A week after Ghosn was arrested on these charges from anonymous sources that he understated his pay by $44 million over 5 years. Speaking of supply chains, he was about to really change the supply chains by merging Renault and Nissan. He already changed the supply chain considerably by taking out an incredible amount of expense with this alliance. What's your reaction to what has happened here?
Well, I think like everybody, I was absolutely shocked. I mean, but what was interesting, you know, in that initial press conference that they had last Monday, that, you know, CEO Sakawa he very much focused on the power that Mr. Ghosn had. That was a theme throughout. And in his mind, obviously, they wanted to do something different, and they found a way to do this. So I think it's shocking. I do hope the alliance continues, because as you said, there's significant cost-cutting opportunities here that, you know, could be realized if they continue the alliance.
And any thoughts on Tesla, real quick before you go? Burning all that cash, do you think Tesla will thrive at some point financially or not?
I think that Tesla will. I think that the consumer is looking forward to new products from Tesla.
Rebecca, good to see you. Thanks so much.
Thanks.
Rebecca Lindland there.